Hi, my name is Alex Carlucci with Gustin Show Associates. Today I want to talk about manual underwriting. So what is manual underwriting? Well, most banks out there will run you through an automated underwriting system, AUS they call it. If the computer doesn't approve you, they'll say, sorry, we can't help you. But FHA and VA, so not conventional, even though conventional says it in the guidelines, no one offers it. The FHA and VA will offer a manual underwriting when the computer says refer eligible. You need to get refer eligible. It can't say ineligible. So refer eligible means that you can do a manual underwrite. Now, manual underwriting means that an underwriter will look at the credit and they have a test to see if it passes a certain credit behavior. So for example, for VA, it's real easy. You could be late on things for the last 10 years, but the last 12 months, you've shown that you're back on track and nothing's been late. Now, you can't have nothing open the last 12 months and say, I'm not late. You have to have credit open. You have to show that you've reestablished yourself and you can pay your credit on time. And then that would be eligible for a manual underwrite. Now, it comes with a little lower debt to income ratios. You have to verify rent on time, and you have to have some money in the bank after you close. So manual underwriting is a way for when the computer says no, well, then the underwriter can still override that and say yes if you pass a certain credit test. Now, FHA is a little more complicated. They want 12 months clean. In the prior 12 months, so they're looking at a 24-month window, nothing worse than 2 times 30 on an installment loan. You got a 60-day late on a car in the last 24 months, it's a no. So some people have really bad past where the computer says no that's older than 2 years on FHA, but the last 2 years you have 2 30-day lates on a car and nothing else, everything else is clean. Even though the computer says no, an underwriter will say yes as long as you fit that profile. And then with FHA manual underwriting, there's different debt to income ratio tiers for other things that they want to require from you. They're called compensating factors. That would be 3 months reserves in the bank after you close. That's 3 mortgage payments that you have left over after you pay your closing costs and down payment. Stay within 5% of your current rent. That's another compensating factor. Have additional income that they're not using to qualify. Like you have overtime for the last 12 months. We can't use that for qualifying income. We use that as a compensating factor because overtime you have to have for 2 years. But if you had it for the last year, that's sufficient compensating factor for an underwriter. And the fourth one is the residual income. A little more complicated. I can't teach it to you in a video because I don't even understand it fully. There's a formula online, but it never works out right. These underwriters push a button at the end. Basically, residual income. The more money you make, the more likely you're going to pass residual. So if you make $2,000 a month, you're probably going to fail. You make $10,000 a month, you will pass. It's somewhere in that $4,000 to $5,000 to $6,000 a month range where people start failing and passing the residual income test. So it depends on the size of your family and the area you live in the country. So it's a complicated formula, but those are 4 compensating factors that they use. And the higher you go to the debt to income ratio, you need 2 compensating factors. If you're on the bottom one, you need only 1. Actually, if really on the bottom one, you need 1 month mortgage payment in the bank. So manual underwriting, it looks at the credit. If you pass those credit tests, then you have to have compensating factors for FHA. And with VA, the compensating factors really are just having a mortgage payment in the bank after you close and verify your rent on time. So manual underwriting is a way that we make a living here at Gustin Show, and we save the day for people who get denied because most banks aren't doing them. They're loosening up a little bit, so I'm seeing more and more banks do it lately because it's kind of slowing down a little bit, so they're kind of loosening their standards, but we're still the masters of it. You need a professional that knows what they're doing with these manual underwrites. You don't want to take it to a rookie and they mess it all up because once the underwriter sees it, they can't unsee it. If it's not packaged right, they can make mistakes. Now, another source of manual underwriting that we do that we specialize in is a Chapter 13. So if you're in a Chapter 13 mortgage, I can do a VA or FHA manual underwriting for you. So most banks will say you're in a Chapter 13, I can't help you. We can. So give us a call. If you've been told no by a bank because the computer said no, or you're in a bankruptcy, we specialize it. We got a bunch of all those loan officers on our team that are trained and ready to answer your call at any time, any day, Christmas too. So give me a call, 630-915-7550, and please hit the like button and subscribe. Thank you.